Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 8th, 2021. It is 3:37 p.m. Eastern Time, so a little over 20 minutes till the close today. I'm going to go over the equity markets. Last video I was chock full of trade ideas, too many to cover the equity markets. So I'll strip these out into separate videos. Um, I'm just starting out here with JJU because for the last several videos I keep meaning to do an update on aluminum, and I haven't done so. The aluminum was pointed out as a short trade right about here, mid-October. Went up, if I recall, a day or two, 3 days, no more than 2 or 3 days after the post, and or the video, I'm sorry, and it's dropped 21%. But I wanted to update it because the other day I meant to, when we were at 55.70, we had hit my trend line, the primary uptrend line. We consolidated around there and had a little flagging action, so I wanted to point that out. So you had an impulsive drop, a little bit of flagging action, and that could project down to that maximum target I laid out, $49. If you look at the flagpole, add it to the flag and break it down. But we are also at the 53.68 target. That was my one. Well, you count the trend lines coming in as support, and we did. We consolidated around the trend line for about a week. You can see there all those candles, as well as that 55.70 price support. That was my initial target zone. And yeah, I did do an update when we hit that. That was the last update. But since then, we took it out. You can see how support works. These are the same levels laid out back here as targets. And you hit it, bounce, hit it again, hit it again. This is a reaction, a consolidation on support, really two support levels. And then boom, when you took it out, impulsive move down, and now one. That would have been Thursday, Friday, when we closed right about on it, and we're there today. It's virtually flat. So that's it. Now, you definitely don't short here. If you're still short, you raise stop. I'm sorry, lower your stops if you're going to hold out down there. I would put it at probably coin toss odds if we're going to continue on down without a significant bounce first. Maybe a back test of the trend line, or even the 5900-ish level. So again, it's equal odds. Keep your stops in there shooting for that, or take profits now. We've been consolidated on 53.68 for the last few days. And one thing that could be the catalyst for a bounce here on the 60-minute chart is this positive or bullish divergence there. So that could be the catalyst there. Futures, that was ALI aluminum futures. There's the measure dropped 23% from the recent highs, and again, it was thrown out right there before that. So either way, I'll move on. Let's go to the equity markets now. There's a lot I want to cover. It's not going to be a long video, I shouldn't say that, but the charts are really screaming right now, just waiting for this the break of not just the QQQ. I know I've been hyper focused, or primarily focused, on QQQ lately, throughout trade idea on the small caps recently. We had they've been running up, but they're about to break as well. And here's the theme of this video right now: the S&P 500, the Nasdaq 100, and the Russell 2000 all have clean and pretty steep uptrend lines, well defined, in which to trigger sell signals. As such, being that it's not just one or two of those indexes, but all three of them, I think there's a good chance that when we get those sell signals, there'll be a pretty good drop, because you'll have stops hit from small cap traders, large cap traders, tech traders with the Nasdaq 100, S&P stocks. And so not really much to update on the Nasdaq 100. I'm still looking for this wedge overshoot scenario. We'll probably dump into the close, my guess, and park on that trend line. It's not far away, so I'm not trying to be dramatic by saying dump. I'm saying a drop of about another 0.4%, give or take. And then tomorrow hopefully will be the breakdown again, just to keep the wedge overshoot scenario ideal, let's say, as I've seen it play out before. But with that being said, simple stuff. Support is support until unless broken, so it's going to be a break of that trend line that will trigger sell signal. Until and unless that happens, the market and the Nasdaq 100 remains in an uptrend. Targets have been laid out, so let's move on to the Nasdaq 100 futures. Then we'll look at SPY and IWM. All right, this is NQ, Nasdaq 100 E-mini futures, 60-minute chart, hourly candles. There's our primary uptrend line, same one as the one we're looking at on QQQ. This is actually uptrend line. This is a lower trend line that I think will come into play and be a target when we hit. So basically, you can see again, it's clean, a lot of reactions, and that's what we need to break. When that breaks, should be a pretty quick ride down to that first target area, about 15,930, 180. We'll call it 15,932, give or take. First support level, probably get a reaction there. And then this is a, let's just say, minimum swing target. At the very least, I think we'll come back down to this 15,716. So if you don't want to try to ride out any counter trend bounces, that's where I'd be targeting. And from where we're at right now, that would be a not much, but close to a 4% drop. And then quite likely these additional targets, 15, 530, 630, and the trend line. That should take us down before all is said and done, closer to 5-6%. And we'll go from there. We'll see what happens on the daily charts if I decide to extend any targets. But again, sell signal pending a break of the trend line. Okay, so that's the Nasdaq 100. And now, of course, you have the S&P 500. Which is right here. I've got it down here somewhere. Let me find my chart. Here we go. ES 60-minute. Nope, we're looking right now. Same difference. You can look at 2-hour candles or 60-minute, 1-hour candles, and you're going to see the same thing, same uptrend line, just going back farther in time. And look at this. Just the divergence continues to build right there. There's your divergence line, and we are right on the line. And again, it's very well defined. Lots of reactions on that line. Here, let's take it down to a 60-minute. We'll go down just 2 months, zoom in. Man, a little snafu in the program there. That ES chart locked up when I tried to step down to that time frame. That doesn't usually happen. So I'm just going to move on to the RTY chart. It's the same trend line. I was just going to show it to you up close. Here's RTY, small cap futures, Russell 2000. So from this point to this point, you had and have had divergence forming here on the RSI with extreme overbought conditions. That's this 82-ish level right here, that red line, and you can see what happens. And so as I mentioned in the last update, usually it's not the initial tag of that. You get a sub here. It goes, we didn't hit it here. The PPO, I have a comparable overbought level, and there we hit it, and now we've been diverging. So we've been diverging for a while on the RSI, but we're also diverging on the PPO. This thing's ready to pop. So boom, it's coming, I believe, very, very soon. And there's, let's just say, there'll be a couple bumps along the way right here, but minimum, I think we come down to 23.42. And then quite possibly here's another secondary trend line. So just like SPY and or the S&P 500 and Nasdaq 100, excuse me, I think we'll, after a reaction there, come on down and eventually touch this trend line here. And let's see if this thing is ready to show me that ES chart, 60-minute. Okay, that's right here. There's the trend line. Boom, right there. Next up would be SPY. Let's jump back to for those of you that don't trade the futures, but you should watch them because that's where things will probably happen overnight, especially if we're going to gap down. And right here, this is what it looks like on the 60-minute chart. Divergent high right there. We had a divergent high here with correction. We went down, hit that T5, 1, 2, 3, 4, 5. Put in that divergent low, if you recall, back here, this positive divergence, which was a catalyst for this bounce, a little stronger than anticipated, but it is simply nothing more than a marginal new high. By marginal, we're up 3% where we were back in the beginning of September when we put in that divergent high, and that is certainly just a marginal new high at this point in time. Doesn't mean it can't go up more, but again, the beauty of this are these trend lines. So I'm going to wrap it up here. We're right on those. You can set alerts, and again, I think they're objective short entries, and we'll see if and when we get those sell signals. It's best if we can get them on all three, but they're so close. So probably one breaks, they're all going to break within close proximity, and we'll go from there. Let's see if we get those sell signals this week or not. This has been Randy Finney with the right side of the chart. Have a great day.